China's economic rise amid Trump's trade war. A shift in global power? When Donald Trump first took office in 2016, one of his biggest promises was to restore the American economy to its former glory. As he returned for a second term in 2025, he made the same pledge. However, recent reports from the financial world tell a different story. Contrary to Trump's vision, the Chinese stock market has outperformed the U.S. under his administration. While American markets face turbulence, Chinese stocks are soaring, breaking records and attracting global investors. China's economic success, despite facing Trump's aggressive trade policies, raises a critical question. How did the country that Trump declared an economic adversary emerge victorious? The beginning of Trump's trade war with China. In 2018, the Trump administration launched a full-scale trade war against China. The reasoning was straightforward. China was exporting far more to the U.S. than it was importing. Additionally, the U.S. accused China of violating intellectual property rights and engaging in unfair trade practices. Trump's strategy was to impose heavy tariffs on Chinese goods, starting with $50 billion worth of imports. China responded in kind, setting off a prolonged economic battle between the two superpowers. The goal was to weaken China's economy, but the impact was not as Trump had expected. China's unexpected financial triumph. Despite the trade war, China's financial markets not only endured but thrived. By 2024, China had caught up with, and in some areas, even surpassed the U.S. Several key factors contributed to this rise. Investment magnet. China's vast growth potential attracted global investors, leading to a surge in stock market inflows. Digital currency revolution. China's development of a digital currency transformed financial transactions and enhanced economic stability. Tech giants leading the way. Companies like Alibaba, Tencent, and emerging AI firms fueled the stock market boom. Jack Ma's reemergence in the public eye signaled Beijing's renewed support for the private sector. Government stimulus. The Chinese government launched comprehensive economic stimulus packages, including interest rate cuts and sector-specific support, particularly in technology and real estate. Western investors, seeing China's proactive approach, increasingly turned to Chinese markets. Major corporations even held strategic meetings in Beijing to explore new opportunities. Pharmaceutical giant AstraZeneca's decision to open a new research facility in China was a clear indicator of global confidence in China's economic future. Stock market shift. China's gains, America's decline. While China's stock indices soared, the CSI 300 index rising 5.2%, MSCI China index up 28%, and Hang Seng index surging 26%. The U.S. stock market struggled. The S&P 500 fell 6.3%. The Dow Jones declined 4.4%, and the Nasdaq suffered a 10.8% drop. For the first time, China emerged as a formidable competitor to the U.S. in the global financial arena. Why did U.S. markets struggle? Trump's trade war backfired in several ways. Increased tariffs hurt American companies. The uncertainty caused by trade tensions discouraged investment and reduced consumer confidence. Sluggish consumer spending. American consumers, facing rising prices, cut back on spending, slowing economic growth. Investor anxiety. Market volatility and fears of recession deterred investors. China's response to economic pressure. Instead of succumbing to U.S. pressure, China adapted and strengthened its economic strategies. 1. Boosting domestic consumption. By focusing on internal demand, China reduced its reliance on foreign trade. 2. Diversifying trade partnerships. China forged new trade agreements, particularly within the Asia-Pacific region. 3. Prioritizing high-tech investments. Major investments in artificial intelligence, semiconductor manufacturing, and digital industries positioned China as a technological powerhouse. The rise of China's tech industry. China's AI sector saw a remarkable growth, challenging U.S. dominance. A relatively unknown Chinese company, DeepSeek, unveiled an AI chatbot rivaling ChatGPT, developed on a fraction of the budget. This innovation, combined with China's expanding tech sector, sent ripples through the U.S. market, causing shares of Nvidia, Microsoft, and Alphabet Google to tumble. Additionally, China's electric vehicle EV industry is on the rise. BYD, a Chinese EV manufacturer, has surpassed Tesla in the Chinese market and is expanding into Europe. The Hang Seng Tech Index in Hong Kong has risen 35% since Trump's return to office, signaling China's growing influence in global technology. U.S. struggles to counter China's rise. Despite China's economic resilience, the Trump administration has continued to escalate trade restrictions. Tariffs on Chinese imports were raised to 20%, while 25% tariffs were imposed on goods from Canada and Mexico, citing their failure to curb the flow of fentanyl into the U.S. China, a major supplier of fentanyl precursors, has denied responsibility and accused Washington of using the crisis as a pretext for economic warfare. Diplomatic deadlock and market uncertainty. Efforts to ease trade tensions have stalled. While Chinese officials seek clearer guidelines on tariff reductions, U.S. diplomats claim that the necessary steps have already been communicated. The deadlock has left both economies navigating an uncertain future. The global perspective, a shift in economic power. Experts and investors worldwide are closely analyzing this shift. Tao Wang, a leading portfolio manager, sees Chinese stocks as a safe haven amid U.S. political instability and AI-driven market transformations. Richard Harris, CEO of Portshelter Investment Management, believes the U.S. economic dominance is waning, while China is showing signs of strong recovery. U.S. officials, however, maintain that current market fluctuations are temporary and that Trump's policies will strengthen the economy in the long run. China's long-term strategy. Despite economic challenges, China is strategically positioning itself for long-term growth. By increasing domestic investments, fostering innovation, and building stronger trade alliances, China is proving that it can withstand external pressures. Conclusion: who really won the trade war? Trump's economic policies aim to curb China's rise, yet they may have had the opposite effect. Rather than weakening Beijing, the trade war forced China to innovate and solidify its global standing. Meanwhile, America's stock market struggles and economic uncertainties raise concerns about its future financial leadership. Is the U.S. losing its status as the world's economic powerhouse? Or will Trump's trade war tactics yield long-term benefits? Share your thoughts in the comments. Thank you for tuning in.